Hope you're all well. As you can see, I'm getting a little bit of hair growth, which I'm rather excited about. Did actually have a position on the Nasdaq, hoping for a bit of a recovery, only for crypto to fall over the weekend, which got me rather panicking. However, I've just closed out with a reasonable profit. More speculative, waiting for these little sort of dead cat bounces, as we know. We sort of anticipate the odd percent day, as I mentioned a few weeks back. So as day traders, that's what we can trade, even though the sentiment is still bearish, and obviously inflation and rates and all the other data that's out there is pointing towards the downside. You know, the odd time we do see a possible chance of a long, you know, there's nothing wrong in scalping that or intraday swinging it if it is there. So yeah, just had my massage. What I'm doing on a Monday now is getting a massage in, getting to the golf course with my mate that I do a bit of business with, and Mondays and Fridays, I'm using Mondays as a bit of a Friday day, where I typically have a half day and wind down ready for the weekend. Monday, I don't really want to stress myself out and start the week on a hectic negative back foot. I've got loads of stuff going on at the moment. There's a potential opportunity to purchase a villa off one of my pals in Marbella. So I'm considering that. It's quite a messy deal, to be honest, because it's a shell, which is perfect for me because I'm an ex-plumber, and to renovate it wouldn't be all that much of an issue. Plus, he can assist with that. So that aside, been getting a lot of messages regarding DCA, dollar cost averaging, okay? And I'm going to do a little bit of a video on this, because you can obviously dollar cost average for the short term, swings. Obviously the market at the moment isn't ideal for that, unless you're shorting the market and you feel that, you know, adding positions to existing positions is the future. So be it. Typically, I like to dollar cost average into my longer term portfolio, okay? And like I say, I'm going to do a video on that and explain how I do it and why I do it. Yep. Good morning, guys. Thought I'd check in. So I want to explain the difference from growing a small account, opposed to trading for wages, when you've got a certain amount of capital in there, that you've got the golden goose and you live off its eggs. This morning, I had a Dow position that I opened yesterday. It was slightly in profit and it's increased and increased. Early hours of this morning, it's increased further. So I locked in an amount of profit. Went to the gym, didn't trade the European Open because I was focused on training, and I was already in profit. I locked in profit. And then it reached a certain level where I took the 20k, okay? So, you know, there is different levels to the game. Not saying I'm better. I bought the dip. On Friday, I bought the dip. It was 8 grand in profit at one point. Let it run, and I ended up breaking even, a couple of £100. So I thought I'll have another stab at this, because it's got to reverse at some stage. Not a full recovery, not hundreds of points, but enough for me to put in an amount of capital to potentially walk away with 10-15%. And that's what I got this morning. I'm sweating now because I've just left the gym. And when I'm at the gym, I see these snowflakes not training properly. Got personal trainers don't even know what they're doing, because no one wants to put in the work. No one wants to put up the capital and risk, okay? I'm prepared to do that. I've risked all my life at living in the underworld. So you think by putting a stop loss in, and the risk to reward, that potentially we could have a decent dead cat bounce or a decent pump of some sorts long, I'm prepared to negotiate that risk to reward in my mind. I see these women now, this fascination with training with bands, okay? They've got no injuries, they're 20-year-old women, and they want a big booty or nice legs, but they're not putting in the work. And I see it all day, every day. When I was in Marbella, I saw an amount of vehicles that paid for my holiday, let alone what I was doing trading. You know, there's different levels to business, people, and trading, whether you want to admit it or not, is a business. It's no secret that I've changed my physique, you know, from when I was younger to now. I run multiple businesses and they do well. I've taken up golf and I'm pretty good at that. And I don't mean that I'm good at everything. My mate wants me to play cricket, but it doesn't interest me and I don't think I'll be very good. Trading, I only bought the dip, guys, in this instance of the two trades, the Nasdaq and the Dow. Bought the dip, saw there was a decent risk to reward, prepared to take a small loss, but equally I was going to gain more than I was willing to risk, because, you know, how far are we going to keep pulling back and pulling back and pulling back? That may have happened, and that's no problem. I would have taken the loss on the chin, or possibly hedged it like most of us do within my community. So, you know, we've got to calculate these opportunities. If it's not an opportunity and I've got it wrong, fair enough. I got it wrong on Friday when I took my dad to Whitby for Father's Day and didn't take the 8k, didn't lock it in, thought I was Barry Big Spuds, made an error, didn't lose 8k, I lost 8k of profit, so it wasn't mine till I closed the position. But in hindsight, I could have had 8k there and then gone again later on the Friday, overnight, which, you know, there's an amount of speculation in that, I do admit that. But, you know, I see a lot of people wanting it all, but they're not prepared to risk it all. And you don't need to risk all your account, but a proportion. You know, that was 120k, I believe, the two trades. And I walked away with over 10% on each trade. Wow, where am I going to get these opportunities again? If I bought a property for £100,000, I'd only get £600 a month rent after tax and issues and this, that and the other. And, you know, you've got to set your stall out and have a routine. If you want to scalp like we predominantly do within the community, great. But when there is them opportunities to buy a dip and there may be the odd 1 or 2% day recovery, then, you know, we've got to potentially take advantage of that. If we've got it wrong, we recognise that. So yes, it was a speculative trade, certainly over the weekend, certainly yesterday, playing a bit of golf, catching up. But I'll tell you what, the more that I'm taking a step back and watching my trades and getting, you know, either scalps or the odd swing or interest swing, I'm noticing a lot. I've got a bit more time to focus on the news, to see what's happening with the economy, reading various analysis articles, and really getting a feel of where we are. Are we going to go into a recession? If we are, the market's going to pull back further. A little bit of positivity potentially, so we go along. We milk it for what it's worth. Yes, I made a mistake and I should have taken the 8k on Friday. I didn't lock it in. Got a little bit brave, thinking this is going to be a sizable, almost attempt at a gap close from the previous days. Got it wrong, but I didn't get them too wrong, did I? And I got 30k. We're talking life-changing money from here. Okay, yes, I was involved with the underworld, and yes, it possibly doesn't seem, you know, all that big a deal, but it's like, you know, really? Yeah, I mean, to me, it's a lot of money, you know, and to think that obviously I could do that in Marbella or here, it bends your mind. Wasn't managing the trade and really stressing me out, took myself off, locked in some profit with a guaranteed stop loss, went to gym, got my phone, position closed. I mean, you know, does it get any better than that? It's all right, the snowflakes, you know, these women that are training on the bands, what happened to squatting? You know, Dorian Yates used to do it, Arnold Schwarzenegger, and it works. But all these snowflakes, they want an easy way out. They want to blame society because they're not where they want to be, or they're gender neutral and all that. It's like, come on. You got to wipe your mouth with reality and get hold of it and grab the bull by the horns, or the bear by the claws, whatever market we're in, guys. And yeah, super happy with that trade. Just goes to show, stick to what you know, and stick with your strategy. You know, lock in that profit, prepared to let it test it, and it slowly increases. And what 2 beautiful days. On the 2 least days, I probably put in the work. I've just let the market do its thing. I've not been absorbed with it, playing golf and gone to the gym this morning. Essentially, that's a few months' work. That's 3 months' work in 2 trades for me. I like to pay myself £10 grand a month out of my trading account. So, does it get any better than that?